Good day, Junior Techies. I'm Mrs. Brimacombe, and we are going to look at Fixed Asset Activity 7. This will be the last activity in this chapter where we focus on problem-solving questions. We do not practice them enough, and when we get them in exams or in tests, we leave them out because we're not sure how to approach it. So make sure that you practice these type of questions. If we look at what has been given to us, you are provided with the information related to speedy deliveries. The financial year ends 28 February 2021. So if it ends 28 February 2021, it means it starts the 1st of March 2020. Now, when we approach a problem-solving questions, I always say, familiarize yourself first with what information is given to you, because there's a reason why they provided you with the information. So if we just quickly go through the information A, it tells us the 3 vehicles are used for delivery purposes. The running costs of the vehicles are as follows. So they provide us with the information when it was purchased, the cost, mileage traveled. Also, what is the courier charges earned? So how much money does each vehicle bring in? And what is the cost by looking specifically at the repairs and maintenance and the fuel and oil. Then they said to us, depreciation is calculated 20% per annum on cost. Information number C. A new hybrid vehicle is advertised in February 2021 at $620,000. The new vehicle comes with a vehicle maintenance plan for 3 years at an extra cost of $50,000. It has a 5.6% savings on fuel consumption. The business wishes to purchase the new vehicle on the 1st of March 2021, which is the first day of my new accounting period. The net profit for the year is 1.6 million. The percentage return on profit is 28%. Due to the business having a market advantage, the profit of the business are expected to grow by 7.5% for the next 5 years. The business has a positive bank balance of 450,000 and the debt equity ratio is 0.2 to 1. Interest on loan is currently at 9.5% per annum. Take note of how financial indicators is incorporated into this problem-solving question with regards to fixed assets. Starting with question 7.1. They ask us now to calculate the book value for each delivery van for the year ended 28 February 2021. So our current financial year starts the 1st of March 2020 and it ends 28 February 2021. So if I look at the cost accumulated depreciation, I will need that for the book value. If we look at delivery van A, the cost is 360,000 and we're going to times it by 20%, but that only provides us with the depreciation. Now we still need to calculate the book value, and to calculate the book value, we're going to take the cost minus accumulate minus the depreciation, and we're going to do the same steps for delivery van B and delivery van C. If I look at delivery van B, I need to calculate it for 12 months. This was purchased in 2019. So the current financial year, we have to calculate the depreciation for 12 months. But if I look now at delivery van C, it was purchased on the 1st of September 2020. So when we're calculating the depreciation, it's from the day we purchase it until the end of the accounting period, which is equal to 6 months. Take note, the accumulated depreciation on the 1st of March 2020 was 0 Rand. That should give you an indication that this is a brand new vehicle. If we now look at question 7.2, should management consider the purchase of the new vehicle? Motivate by giving 5 points by quoting figures. So I didn't ask you to identify a problem with each vehicle. The question says, should management consider buying the new vehicle? So we are going to look now at each vehicle and identify certain aspects to see which one of these vehicles could we possibly replace. So if we start with the lifespan of each one of them, depreciation is calculated at 20% per annum on cost. So this means when it's fully depreciated, it will equal 100%. So if I want to know what is the lifespan, we take 100 divided by that 20%. That means the lifespan is equal to 5 years. So if we look at the date purchase of each vehicle, we can calculate the number of years left over for each one. And now it is clear if I compare all of those, the oldest vehicle is delivery van A. It's got 1 year lifespan left. The book value is 72,000. Remember to quote figures. If we now look at the earnings power, so in other words, how much money does each one of them bring in? What is their potential? What have they brought in? We look at the courier charges earned divided by the mileage traveled. So for each one of them, we take the courier charges divided by mileage traveled. Then we can compare per kilometer which one has the highest and the lowest earnings power. So here it is clear, delivery van C has got the highest amount and delivery van B the lowest. If we look at the cost per kilometer for each delivery vehicle, we are not going to look at repairs and maintenance and fuel and oil together. We're going to look at them separately. So when we start now with maintenance and repairs, we take the total repairs and maintenance of each delivery vehicle and we divide it by the mileage traveled. So now we can compare and we can see which delivery van has the highest cost per kilometer and which has the least. So if I look at that, delivery van A and delivery van B, it's very close together. Delivery van A, the maintenance and repairs is 62 cents per kilometer. Delivery van B is 64 cents per kilometer. If we look at fuel and oil for each delivery van, we're going to take the total fuel and oil cost divided by the mileage traveled, and that will provide us with the cost per kilometer. And now we can compare. So if I compare, delivery van A is the most expensive per kilometer and delivery van C is the cheapest. If we look at percentage of sales, now we're going to look at information D provided. Remember, there's a reason why they provide you with the information. The net profit for the year is 1.6 million. So we are going to look at, of that 1.6 million, what did each delivery van bring in? So we take the total courier charges earned divided by the net profit for each delivery van. And now we can compare. Delivery van A has got the highest percentage at 40.62% compared to delivery van C, which is the least. It's got the least percentage. And you could look at why they've traveled the least also kilometers. That's a potential problem. So now we looked at 5 different points. And the question was, should we buy the new vehicle? So the answer to that question is yes. And now we need to quote figures to support our answer. So if I look at the first reason, delivery van 1 is old. It's got 1 year lifespan left. The book value is 72,000. The total depreciation per annum is 72,000. So it means that if I keep it for another year, my carrying value is going to be 0. It means that we have reached the 5-year lifespan. So this is one point that I can mention. Secondly, if I look at what do we want to buy? We want to buy a new hybrid vehicle. Well, what is a hybrid vehicle? A hybrid vehicle is electric and fuel. It has a 5.6% savings on fuel consumption. The next point that we can look at, the new vehicle will cost less than van C. If we look at the cost, it is 620,000 plus the maintenance of 50,000, which means it will cost us a total of 670,000. The next thing that we can look at is the net profit. They said to us the net profit is 1.6 million and it's expected to increase by 7.5% over the next 5 years. So we can invest in another vehicle or replace one of the ones to generate an additional income. Next, we're going to look at the debt equity ratio. If we look at the debt equity ratio, it tells us what is our financial risk. Are we reliant on own capital or borrowed capital? So our financial risk is low. The interest rate on the loan is 9.5%. So if we now compare the cost of borrowing money to what is the return on the profit, which is 28%, it means that we are positively geared. Then the last point that we could also mention, the business has a positive bank balance of 450,000. So it means that we're not in any financial risk with regards to we don't have even money in our bank account. Now we need to make a decision in the business in the next question. But which one of the 3 vehicles should be traded in and why? So how do I approach this is by identifying all the potential problems for each delivery van. So if I look at that, an option would be delivery van A. It's the oldest. The fuel consumption per kilometer is the most at 2 Rand per kilometer. Then we also got option number delivery van B, the performance capacity. It has the least earnings power. The cost per kilometer is the second highest at 2 Rand 57. It would not be acceptable to use the brand new delivery vehicle, which is delivery van C. Yes, it's not actually reaching its potential. It's got the most earning power. It's driving the least kilometers. The percentage of sales is the least, but that is something that needs to be investigated to see what is the problem. Why is this vehicle not used? Because it's a brand new vehicle compared to the other 2. This concludes Chapter 2 on fixed assets. I hope that you've learned a lot through all the explanations of each activity. I hope that you've noticed as well, the emphasis was placed a lot on diminishing balance method because that is the one that we battle with the most as soon as the book value is involved, especially getting the old or the remaining when there's asset disposal. I want to leave you with the following quote, "There is no substitute for hard work." I hope you have a wonderful day.